Welcome to the live chat. I'm your host, Joseph Ranke. Glad everybody is here joining us today. Got a number of good things to talk about. Actually, I wouldn't say good things, bad things, whatnot, but a lot of updates to talk about, especially when it comes to student loans and what's going on with all these lawsuits and all these things happening right now. That being said, let's jump right into it. First and foremost, thank you. If this is the first time you've seen our YouTube live chat, thank you for coming on. Make sure you subscribe to the channel so you get live updates with this, as well as other things that we put out. If you're listening to the podcast, again, be sure to subscribe, share with your friends. It helps us grow. The information helps them also. Good to be here. Good to be here today. So what are we going to be talking about? I'm going to be navigating some different screens here, looking at a bunch of different things. But primarily today is going to be student loan stuff, okay? Because there's a lot of news out there going on, a couple lawsuits going on, a couple people got pulled away, cannot get qualified anymore for the 10K and loan forgiveness. First things first, the PSLF lawsuit, what that was the Biden administration came out and they said that to make things easier, anybody on an income-driven repayment plan, so there's about 8 million borrowers, they already have their income verified. So remember, on this whole $10,000 loan forgiveness thing, if you don't have more than, or if you make less than $125,000 in income, you can qualify. So what the Biden administration said was, if you are on an income-driven repayment plan already, we already have your income data. You don't need to verify anything. You're just automatically qualifying. Done, out the door, right? Well, the problem with that is if you're on public service loan forgiveness, what's the point of having anything forgiven now? Like, you're going to be getting loans forgiven when you qualify. And the reason why that's a big deal is because a lot of the states are going to be charging taxes on this loan forgiveness. So now it's a burden on me having to pay this when I shouldn't have to. And that was grounds for a lawsuit. So it was filed. And immediately the Biden administration was like, oh shit, like, yeah, that would stop this. So they came out literally the next day and they were just like, oh, we're going to put an opt-out feature on the application. So you can opt out of automatically getting it. And there goes the lawsuit. So as soon as they put that opt-out on there, literally it went to court, and the first judge that saw it, she denied the stay. That doesn't mean that court case got thrown out of court. It just means that the stay, meaning to stop it right here and now, that got thrown out. Okay, so she didn't allow it. Okay, but that wasn't the only one that got that only lawsuit that got filed. And there's another one that got filed too. This one might have some more teeth in it. Okay, regardless of what the Biden administration came out and changed, I'll explain all this. Okay, so this actually goes back historically, way back when, back in 2010. Okay. Prior to 2010 and way before that, there was a lot more what's called FFEL loans. So they were federal loans, but they were owned by private lenders and loan servicers and all that type of stuff. And the reason why they called them federal loans is because the government came in and guaranteed them. And so, like, I could be Joe Ranke and I can lend a student loan to somebody, but that interest rate was that loan, everything was guaranteed by the government. That turned into a federal loan. And so what President Obama did around 2010, I think it was say, wait a second. Why are we giving all this interest to the banks? Like, we're guaranteeing this. We can do this better. So they went out, hired all the loan servicers, like the Navians and the Nelnets and all this stuff. And they basically got rid of all those old lenders. So the loans went from FFEL loans to direct loans. Okay, direct means you got it directly with the government. There is no guarantee. There's no middleman, private lenders, nothing like that. Okay, so that's what happened years ago. So when they first rolled out this whole 10K to 20K in loan forgiveness thing, they said it applies to all federal loans. And like the states, like there's 6 states and a couple of private lenders that turn around and say, well, wait a second, that's screwing us. Like, if these things get forgiven, that's out on our revenue. And the reason why that's a big deal is I'm not even talking about investors at this point. I'm talking about the states that file the lawsuits. A lot of the states own this paper and they have their own student loan plans and that are done through the state. And so when they do a budget and they say, hey, these are the loans that we're going to be giving out, and they start enrolling people in their state universities and all this type of stuff, it's based on those student loan payments coming in and the repayment of that debt coming in. So all of a sudden, the federal government says, hey, we're forgiving $10,000 in loans. That's revenue to those programs that are not going to be there anymore, which means less people are going to get to go to college because that revenue is not there anymore. So that's why the states filed the lawsuit. Okay. Now, what the Department of Education then turned around and did was change a rule in this. So what happened in August when they first came out with this, if you had those FFEL loans or Perkins loans too, by the way, this applies to Perkins loans. If you had those loans, you had to consolidate them. So when you consolidate them into a direct loan, it's considered a brand new loan, but it's a direct loan. So if you wanted a $10,000 forgiven, you consolidate $10,000 worth of loans, and now you have a brand new direct loan. Now, there's also two big things wrong with that. First of all, like, let's just say I owe $30,000 and I consolidate my loans into a direct loan. Yeah, I get $10,000 forgiven, but now I'm considered in a brand new loan. So that restarts the entire clock over again for me. So I got another 20 or 25 years. Okay, not a good thing. Okay. So that's one thing that's bad. But the state sued. That's the second thing, and I touched on this already. The state sued them, saying, you're costing us this revenue. We're harmed by this. And so what the Biden administration did is they came out this morning, or actually, I'm sorry, they didn't come out. They came out last night without telling anybody, like nobody was going to notice this, and said that FFEL loans and Perkins loans no longer qualify for the $10,000 or $20,000 in forgiveness, that you would have had to roll over the loans and consolidate them prior to yesterday. Okay, so like if you still have FFEL loans and you didn't consolidate them yet, you're shit out of luck. But what they're saying is, like, if you consolidated them prior to September 29th or September 30th, hey, you could get $10,000 in loan forgiveness. So they're thinking that by doing that, that's going to completely just tank this lawsuit. My thing to that, because I talked to a few lawyers this morning, and I don't think it's going to tank that lawsuit. And here's the reason why. That announcement, the 10K, it was rolled out, I think like August 24th or something like that, August 25th. I don't remember the date. It was one of those dates. It was rolled out then. And right on the Department of Education's webpage, they have been advertising, if you have an FFEL loan and a Perkins loan, that you can go into this consolidation, get a direct loan, and then qualify. So regardless of if they stop it today, between the announcement in August and today, they had people that consolidated. And all the lawsuit has to do is prove that one person did it, according to the lawyers that I talked to. That one person consolidated and that they qualify for this, and that cost these states and these private lenders money. It could be 1 cent that it cost them, and it still could get held up in court because of that. So that is why, again, I'm not a legal expert or anything like that. This is basically what I've heard through lawyers that I know, is that is why, regardless of the administration coming out today and saying, no, FFEL loans don't get it, Perkins loans don't get it, it was as of today if you hadn't consolidated. But there's that window of time that they basically cost the lenders. We'll see what happens in court, right? Because nowadays we have activist judges on both sides of the aisle, and they do whatever they want to. So we'll see how they interpret these laws. Not sure, but that one so far has teeth. Now, are those the only two that are going to be filed? I don't think so. I think you're going to actually see more coming down the pike here soon, especially as we get into October, because they're going to be starting to get forgiven soon. So we'll see what happens with all that. So that is the student loan announcement today. By the way, guys, I'm going to be coming out with a video. So this is, again, why you want to subscribe to the channel. if you're on YouTube as well as on the podcast, or make sure you go and bookmark our blog at fitbux.com/articles. I'm going to be coming out. I'm probably going to be recording it tomorrow. So I don't know if I'm going to put it out tomorrow or Monday or Tuesday next week. But Biden's other announcement about the whole IDR thing and how people could take advantage of it. Like, again, it's all hypothetical because we've heard nothing on that plan yet. But, I'm going to be highlighting that plan specifically in an entire video. So that's going to be coming out here soon. So rest of the weekly financial update, I wanted to talk about mortgages because everybody's freaking out about 7% mortgages. Personally, I think it's a temporary thing. And not only that, but 7% is not that big of a deal. So when you look at this stuff and it's like 7%, I saw a news headline, mortgage interest rates hit their highest they've been in 15 years. The reason why I say it's not that big of a deal is because 7% historically was not that high. Like, 5, 6, 7, 8, 9% was not that big of a deal. It's only the high of the last 15 years. That's not a big deal. In fact, I remember like 06, 07, 7%, 8%. It's like, yeah, like, well, what's the big deal? Okay. So I don't see the interest rate being at 7% as a bad thing. The reason why it is a huge deal is not so much the interest rate. It's that home affordability still sucks. And that's because housing prices were escalated because of free money, inflation, everything else. Basically, they were propping up the markets. Everybody loved it, right? Real estate agents love it because they get paid a higher commission. Mortgage brokers and lenders love it because they get paid more in interest. Government loves it because everybody's buying a house. Fantastic. Woohoo, right? So everybody was having fun and real estate prices went through the moon. So the big issue right now is not the interest rate, it's the home affordability. And that's what I mean by that is like, an average house might be 500 grand and at 7%, that's not good. But where that house should be is probably like 250 to 300 grand. So a 7% loan on 250 or 300 grand is a lot different than a 7% interest rate on a $500,000 loan. And so it should drop the housing prices. If housing prices follow and they drop, then, we'll see more stability in the housing market. To me, a more healthy market. We'll see how healthy the Fed wants to be, though, right? So we'll see. With that being said, I just put out earlier this week a video and a podcast. I call it a back of the napkin real estate valuation. So if you're going to be looking at buying a house soon and you're trying to say, hey, when should I buy it? You might want to take a look over at that video, that podcast. I'll put a link to it in this video as well once we're done with the live chat. Because I think it's coming down, and some places it already has. So it's that. Stock market, last part that we talked about, right? Big announcement there is, again, markets keep falling. Today, I actually haven't checked. It was kind of flat when I checked earlier, so I don't know where it's at right now. This is Friday afternoon, so it's going to be closing here soon. The big thing there, though, I was talking to some guys that I know that trade. They're on like Wall Street and all that type of stuff. And their big thing is that we got a lot of ways to go. And their perspective on it in terms of dropping is, yes, the markets are down to like 25%, 25%. But a lot of that is weighed because of tech companies. And tech companies have gotten majorly hit already. What hasn't been hit and what's not reflected is like retail companies. And what these analysts that I know of have talked about is like these retail companies, they're not adjusting their financial projections and their estimates. They're telling the markets, yeah, we're still estimating this amount of revenue and these margins. And they're all saying there's no way in hell they're hitting any of these. Like, no shot. Like, this can't happen, with all these different people like FedEx saying this and, container companies saying that they're empty. Like, no one's buying stuff. I forgot who it was today. They just came out with something that they have a ton of inventory. That means nothing's moving, nothing's selling, right? And so I think, based on what they've said, the next shoe to drop in the market is what's called consumer discretionary. So like retail and all that type of stuff, I think is going to get hit even more, and that's going to drive the market down even further before we really see kind of like this bottom. Of course, oil, that's another big one, because a lot of you guys with your personal finances, gas, all that type of stuff, Yes, it's dropped. I mean, out here in Texas, I think we got down to like 290 something a gallon. I was just in California, and it was still almost $6. I was like, oh shit. But it was down to like 299 here. It dropped down to like $75 to $85 a barrel. I think that's also going to go up just because of what's going on over in Europe, what's going on with how they dropped it with the strategic reserve and putting out fuel for that, things that are going on in like Florida with the hurricane. Like, to me, there's a lot of emphasis and some tailwinds that actually drive real oil up, which again, that's going to hurt your budget because of more gas. So start prepping for this stuff now. So that is the live chat for today. Again, if you guys have questions throughout the week, shoot us to them. If you're not in our FitBUX finance group, throw them in there. Join that on Facebook, on Instagram at FitBUX Official. You can leave them in the comments here. We'll get them. I'll try to answer them in the next live chat.